3, 2, 1. Good morning, everyone. Thanks for joining us here today again on our live streams. Today, I have another very special guest for anyone who has been following along. My name is Sam. I'm with NATP, and I also have with me today Misty. Misty is an extraordinary resource. Misty, your title is tax content specialist, but you do it all basically. And so Misty knows just about everything that you could ever want to know as far as taxes. I know you're going to say that's not accurate, Misty, but you are a very good resource. And we are talking about something really special today, actually, that Misty has past experience in. We are talking about auditing today. And so specifically, as many of you probably have seen or heard by now, there's been a lot of talk about the $80 billion in funding from the Inflation Reduction Act over the next 10 years. And we've been seeing a lot of headlines about, an army of IRS agents expected in the coming years. The number has been 87,000 that's been thrown around. Misty, what's the deal with that number, and what does that have to do with the $80 billion in funding?
Well, first, we have to really think where that $87,000 or 87,000 IRS agents is coming from. And now you have to look at history. One, the IRS has lost 23,000 employees since March of 2022. So they're going to have to backfill those positions. We all know they're behind. So that's part of the cause. And when you think about it, with the population of where we're at, they're expected to lose another 50,000 positions within the next 5 years due to retirement. So when you're looking at the approximately 87,000, a large chunk of it is because you're trying to fill positions or expecting to fill positions over the next 5 years. So, and we also need to consider what the IRS has published on what they plan to do with these funds. So some of it is actually going to be assisting with answering phone calls. So some of those positions could be additional customer service representatives and the upgrade to computer systems. So you need staff to do that. That's going to be IT staff. That isn't going to be an auditor in that instance. So enforcement isn't just agents, and I can truly attest to that one. It's not just the person out in the field, or maybe you're calling somebody and talking to them over the phone. It includes legal support and also those investment in technologies to help with those investigations.
Got it. So, we've seen reports of perhaps this might mean agents coming to your house, like you said, maybe armed. That's just not what is in the plan.
No.
Right. Okay.
No. I mean, some of the information I read, and I was looking into this too, because it's what is really going on, because I know Tom said it in its last one, those headlines are like intriguing and you're thinking, oh my gosh, what's going on? Really, when you're talking about armed, you're talking about one division, and that is our criminal investigation division. And what I saw last night, they're talking about maybe adding 400 positions, and this is over a 10-year span. This isn't going to happen overnight. So it's that subset, and criminal investigation is a very small subset of what the IRS does. They're going after, a way to explain it is, the worst of the worst. It's not your normal everyday business. If they're doing operations on the up and up and the best they can, they're focused on those who are doing fraud. They're deliberately trying to evade taxes and doing something that is almost, you could call it extremely shady at that point, where it's you know what, this is just not legit. And that is where you're looking at that enforcement side.
Got it. Okay. Thank you for clarifying that. I know that's been on the mind of a lot of people.
Yes.
And so talking again, about funding, how is this going to impact tax professionals and taxpayers as far as the funding from the IRA?
So when you're thinking about the impact, is one, when you're talking about additional customer service and the technologies, again, looking into, it was a statement by actually the IRS that they plan on trying to provide additional information for taxpayers to make it easier on them to find what they need to file. So again, the focus isn't going to be on you're smaller, under, I think the number I saw was $400,000 in income a year. You know, they're trying to provide the information for most taxpayers to file their returns accurately. So think about how we struggled this year in the last couple of years with getting guidance posted anywhere, whether it be an FAQ or a bulletin published by the IRS. Think of that type of information coming out. Making sure publications are updated. That's all part of this when you think about the technology side of it. Furthermore, then when you think of from the tax professional side of it, when you talk about investing in technology, it's that, well, what are they going to do? So this is where that auditing background comes into play, where, you know, in order to select an audit, it's not always random as some people think. I mean, there are parameters they put in place. Think about how they get automated audits. Somebody isn't physically looking at that. That is really, you're looking at certain parameters on the return. Does it fit? Yes, it's going to kick out a letter. So that's what you're looking at with those additional technologies. It could be a letter correspondence type of audit, or it could be more of the field selection. So when you're looking at the field selection, maybe they're going to focus on a specific industry. Well, if you have a lot of clients within that industry, yes, you may see a slight increase just because that's your client base. But again, if you have the documentation, you're working with your clients on this is what we need to do and making sure everything is on the up and up, and just, you know, asking those questions if something doesn't feel right, it shouldn't be that big of a concern. And again, this is over 10 years. We're not going to see this overnight. There's certain things that have to happen before you could potentially see that increase. But coming from experience, I think that is where it's going to be. And the investment in the technology and the staff to look at it, you're looking at, you know, for lack of better terms, data analytics. You know, is it outside the norm? If it is, okay, now why? And somebody may question you.
So essentially what I'm hearing, if you're doing what you're supposed to be doing and, you know, being a reputable tax preparer, things should be just fine.
Yes, you explain it. Like sometimes you're going to get a letter no matter what, just because, you know, you have a mismatch, or it's simple, easy to explain. But like I said, if you know, okay, my client, I know they have their documentation, I know they keep their records, you know, I'm preparing the return based on that information, you shouldn't have anything to worry about.
So you talked a little bit about, Misty, your background, and I mentioned it in the beginning, but I want to dive into it a little bit more because it's super interesting. You have a background in auditing, so you were an auditor for the state of Minnesota.
Correct.
Tell us about that, what you did, what it means, all of the nitty-gritty.
I was an auditor for the state of Minnesota, worked in their individual income tax division. So I know some people may be pausing, going, well, what does that have to do with federal taxes? Because of how it was set up, we could audit federal. So really what happened, it wasn't me going through a list of taxpayers going, I want to pick this one. No, we already went through a selection process. I'm not going to go in the details because, again, you know, former employer, respecting their privacy in that sense, but they did look at parameters and what fit. So we did do industry audits. You know, if you look at, and now I know it's changed over the years, but back then you're looking at high cash audits, high cash industries, so bars, nail salons, those type of professions. So in that case, it was you got your audits, potential audits, I would always say, and then we had to do legwork before we even reached out. So when I say the legwork, you're doing research into it. You're looking at the, you know, at least the last 3 years of filing. Is this year an anomaly? Do you want to potentially expand this to include those prior years? And then it's also, you're looking at what's the likelihood of an adjustment. So maybe it was one item 1 year, could be easily explained away, or is this kind of a trend and it fits? You know, we'd also look at what are industry norms, which are published out there. So you could do a comparison and say, you know, these few expenses just seem extremely high and unusual. So then you would send a letter requesting information, and it could be a letter or a request for an appointment. And then we would just meet and have a conversation of what's going on. I think some people think auditors are scary. I always looked at it as I'm trying to help out and educate individuals as as much as I can. You know what I mean?
Mhm.
So,
Mhm.
and that's a different perspective. I know everyone is going to have horror stories, but when I was in that field, that's part of it. It's the education side of it. You're trying to help them become compliant going
Mhm.
forward.
Absolutely.
So, and then also when we're talking about audits too, I mean, I was a field auditor, so I would be going out and going to the business, or I might be checking out, if they said they had, for example, horror story horse farm, and you're driving around and trying to figure out where is this place. It can be a little scary. Again, I didn't carry a weapon, but
Mhm.
did I have somebody else with me? Absolutely, because you're just trying to protect yourself in that case. And again, it was a lot of back and forth. And usually at the end of the day, if there was an assessment, there's a write up that goes with it. There's background on why you're doing the assessment and making it, again, as clear as possible. So I did that for several years. I will say I did get out of the industry just because part of it, you know, I dealt with more of people who didn't have preparers.
Mhm.
I think I could say 95% of the audits I was involved in, there was not a preparer involved. These were self prepared returns. So
Mm.
in that case, it's just, oh my gosh, if you would have had somebody to guide you, this could have been prevented potentially.
Sure.
But it was very interesting in that sense, and it wasn't ever I'm out to get you attitude. It
Yes.
was always how can I help and what happened. You try
Sure.
to go, and maybe it's naive thinking, you
Mhm.
know hoping people have the best intentions. Some people did not, and I ran into
Mhm.
those as well. But it's a give and take process, and hopefully, even if you do see an increase, it's easier. But again,
Mhm.
you're also dealing with an individual, so
Mhm.
you have
Sure.
to keep that in mind.
Interesting. Um, so switching gears here a little bit, what
Yeah.
is your biggest tip for tax pros, preparing for an audit? Say they get that notification and now what?
Honestly, one, if you can have the correspondence sent to you versus the taxpayer, that'll, help a
Yeah.
lot.
Mhm.
So make sure you check that box, send correspondence, get POAs if you think you're worried about it. But two, educate your clients. I think some of the things that I've heard, even working now in a small tax office part time and talking to members when I was doing the research department, you hear too often that, yes, they got the letters, they threw them away. Well, that doesn't help. The earlier you can get involved in that process, the easier it's going to be. You know what you're
Mhm.
dealing with, and you can prepare ahead of time. So part of it is just educating the client on, if you see a letter from the IRS, just don't throw it away. Send me a copy, do whatever, just so long you are involved from, hopefully day one versus, oh, by the way, you're already in appeals. They may be levying you. At that point, it gets a little more complicated.
I hear
So
that.
I would say just make sure they're up, you know, you're involved from day one
Mhm.
is pretty much the biggest piece of advice I can give.
That's good. That's perfect.
Mhm.
And expanding on this, so what should tax pros communicate then to their clients specifically, besides, keep me involved? Is there anything else that you can think of that might be good tips?
I think one, if they are thinking about a refund or when they need to make changes, or if they find something that was an error, you need to keep your statute of limitations in mind. So again, 3 years from the due date of the return or filed if later, and then 2 years for a payment. So keep those dates in mind. You don't want a scenario where somebody is coming in, and I know we've all seen it, where you get a new client who's been preparing the returns for years, and oh, lo and behold, their prior year returns were incorrect. Well, you're also looking at the statute of limitations for audits. Same deal.
Mhm.
They have 3 years as well. So keep that in mind. The other thing, though, too, is that's the general. Now you're
Mhm.
also looking at exceptions to the rule where it could be 6. So
Yeah.
that is where you're looking at your understatement. And then on top of it, you also have non-filers, where non-filers, if they've never filed a return, that statute of limitations has not started. Now, if you're dealing with a client who's maybe hasn't filed for years and years and years, you may want to seek additional advice on how many years to go back. Even talking from my experience, I dealt with a lot of non-filers. I went back on one individual and was able to get 10 years worth of returns. And this person wanted to become compliant. So this was outside the norm. Normally it was like, okay, let's at least get the last 3, potentially 6 if we see there's a lot of income. But in that case, it was 10 years. He wanted to come clean, as he stated it. And we just worked together to get 10 years worth of returns filed. So, and then that was a collaboration effort. It was very not the norm of what I was used to working as an auditor. So it was kind of nice. But keep those dates in mind because, sometimes if somebody sees something, it's like, oh, we hate to say this, but it's like, okay, 2 more months on this return. What am I going to do? That's a dilemma, right? So just keep those dates in mind. And then if somebody is in collections, also keep those collection dates in mind. And when, you have 10 years to collect, assuming there hasn't been a pause in that time frame. So if you can keep those dates in mind, it helps you out. And I think as well, it's just understanding too where you are dealing with another human being on that other line. So sometimes the personal connection helps. I can tell you, just working, for the state of Minnesota, if we could work as a team, it went a lot easier. But the minute somebody got combative or I found out they lied, it changed the tone completely. So realize you're dealing with a human being too on that other end. And most of the time their intention too is let's just make sure they're paying their fair share. And that was even in the statement from the IRS is we want people to pay their fair share. That's it.
No, that makes sense. Those are really good reminders to keep in mind. You can get caught up in the minutia and the little details that these are truly people too. Yeah. So we have discussed this already in previous broadcasts, but NATP members do have a ton of access to resources, including more information about this topic. Misty, I'm hoping that you can, just highlight a few of those that NATP members have access to that could help in their career.
We have tons of client newsletters. So we have ones that are issued a cadence that are mid-year and end-year. But whenever we have new tax laws, we will develop client newsletters for that, and it helps you educate your clients on some of the tax law changes. I know we're all busy, so if you can take something that somebody else did, maybe tweak it and send it out, that's a time saver for sure. We also have plenty of worksheets, white papers, information to help members with specific topics. That is free to members. It's not necessarily a research question. You can find this online, not to mention articles that will feature and walk through different things. So there is a ton of information tons of information out there. Also, one thing to keep in mind, because this was mentioned earlier, if you're seeing an increase in audits, at that time you might want to think about getting a designation, whether or not it be an EA and an AFSP, something to help with the representation side. If you see the uptick, I'm not saying run out and do it now, but it is something to consider. If we are going to see more, whether it be letters automatically generated or field, like more of an individual type of audit, in that case, you may want to look into it just so you can help your clients through that process as well. And of course, with all of that, we do have tons of courses out there that focus not only on auditing. So we have several where we have Eric Green, who is an individual who helps others with representation. So he's kind of our guru. So he has 2 webinars out there and a couple of workshops where he'll go through a specific thing, whether it be a lien or levy, how to address an audit, what to do with a correspondence audit, and what to do in those scenarios where the taxpayer hasn't given you those letters or your client hasn't given you those letters in the past, and how to deal with those scenarios now.
And Misty, we did just have a question come through,
Yes.
and we covered this already, but I want to, reiterate or have you reiterate if that's all right. The question: Are audits randomly selected, or are there triggers that flag audits? And you did talk about this, but can you
Yes.
restate? Okay.
So normally when you're thinking about an audit, typically there's going to be triggers. Again, you're looking at a number that might be outside of industry norm. Some of the ones that I dealt with in the past actually were NOLs, where an NOL just mysteriously popped up on a return that caused red flag. So you're looking at okay, how did this go about? And when I say an NOL, we looked at the prior years and there was no explanation of where this came from. So where is it coming from? Or sometimes you can look at means, and I would call it, we called it indirect audits, where something didn't fit. So this person was making, you know, $23,000 a year, but they had a lot of expensive toys. So when I say toys, you're looking at cars, um, boats, things that just don't quite fit. Now, yes, there's gifts, and I found that when I was doing those, where sometimes it's a gift from a relative. Awesome, simple explanation, but sometimes there's just that, what's going on here?
Yeah.
But usually there are parameters that they look at. Now, can some be randomly selected? Yes. We didn't always have computer generated ones or other sources for us to find audits, or I know, I mean, this may sound so scary, but a group of us would go out to lunch and you happen to be sitting next to a table where somebody's talking about something that doesn't sound very legit from the tax side, and you're like, okay, how can I get more information on this individual? So you pull a license plate number. Again, that's extreme. It's just you
Mhm.
happen to, at that time, I would say I was at the right place at the right time.
Mhm.
But that's just one other way. So they could be random, but a lot of the times there's going to be something on there that just doesn't seem to fit.
Right. No, that's great information. Misty, anything else before we wrap up today? Is there any parting words you have for tax pros or anything else?
And I think one thing to look at is, just to keep in mind that this is going to take time. And when you see those headlines out there, sometimes it takes, take a few moments to do the additional digging and not
Mhm.
panic to figure out what's going on. When we think of 80 billion funded to the IRS, they have 10 years to spend this,
Mhm.
so it's going to be chunks, and they're probably going to focus on things that are going to do quicker resolutions than something that might take a long time. So they've stated they want the customer service. They want to help
Mhm.
taxpayers too in this sense. So it's not as bad as I think some of the headlines are going to make it out to be.
Yeah. Well, no, it's nice to have a voice of reason and, just kind of bring us all back a little bit to some
Yep.
calm. So thank you, Misty, for doing that. Thank you for being here today.
You're
Like I said,
welcome.
your background is so interesting. I love speaking with you. You're so knowledgeable. And
Thanks.
everyone listening, thanks for joining us. We're excited to keep you updated on all the industry news and how it affects your practice. We are going to be broadcasting live again soon, so make sure to watch our social media channels for those announcements, and follow, like, subscribe, etc., all of those good things, and you can be updated when we go live in the future. So that is all I have for you today. Thank you again, Misty. Appreciate you being here,
You're
and
welcome.
we'll see you all next time. Bye.
Thanks.